All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about natural gas. We're going to break down all of the most important charts that you guys need to pay attention to. So we're going to take a look at the natural gas futures on the weekly chart. Okay, we broke out of our triangle pattern here and we're pushing up to that zone. I said that it's very possible we can test this $3.50 to $4 range when it comes to natural gas, and you can see that that's where we're at. We need to be really cautious because our 200-day weekly moving average is right there. We're also going to go over the MCX futures and take a look at the monthly chart, okay, so you can get a big picture idea of the monthly supply and demand zones. And then we'll zoom in from there and go over the 4-hour chart. And we talked about how this was a risky area to be buying over here, and it was very possible that we could break down, come back down to these levels right here for our wave 4, and that's exactly what we got. And we're proceeding higher up to our wave 5 targets. So things are going good, but there are some things you do need to be cautious of, and we'll break that down. All right, we'll talk about BOIL. BOIL for a lot of people has really been a bloodbath. All right, and there's a good reason for it. There's lots of decay factors associated with BOIL and contango. I have a really great video breaking all of that down for you guys. And BOIL is more of something that's used to be as a short-term trading instrument rather than something you would buy and hold, right? I mean, if we look at BOIL, it's just been consolidating sideways really ever since almost the beginning of the year, since March. And meanwhile, we take a look here at the futures, and you can see even just on the monthly chart that the futures have actually performed pretty well this month, or not this month, but this year for natural gas. So you do want to keep in mind the risk associated with BOIL and also UNG. UNG suffers from a lot of those decay factors as well, just not as heavily. And we're going to break down all of the key levels for all of these today, so you guys are prepared and know what to look for. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance content, as well as free trade ideas. I try to sprinkle in 1 or 2 free trade ideas for you every week. And this is what they'll look like, right? Highlighting some of the conditions and the chart. Okay, you can see how this trade played out very nicely. We also talked about, short positions too, right? And this was, a couple months ago talking about home builder stocks, and this is the XHB ETF chart right here, and you can see how that chart ended up playing out. It dropped over 18%, so that was another nice trade idea. This is SWK, Stanley Black & Decker, with a rising wedge, highlighting where we think price would come down to, and that trade also played out very well. So if you're fans of free valuable content and you want free trade ideas sent to your inbox, go ahead and sign up for that newsletter using the link in the description below. And if you want access to all of the different trade ideas, you can actually join the Discord. There's an investment intelligence Discord, and in there you'll get lots of great resources, a community of traders, and also full access to all of the different trade ideas and charts that I'm looking at. All right. If you ever feel like you need that one-on-one personal touch, I know a lot of people with BOIL and natural gas. I've had a large amount of clients that come to me and book those 30-minute and 1-hour sessions, and have big positions in BOIL, and are trying to figure out what went wrong. So if you ever want that one-on-one personal touch and you feel like there's some questions you might need answered, feel free to use the Ko-Fi page, click on the commissions tab here, and that's where you can book those sessions directly. You can also come in here and click on this buy a coffee button, and it's basically a way to leave a tip or donation for the free content I put out for you guys. Now let's get into the video and talk about the weekly chart here. Okay, we had a bullish pattern here on the RSI known as an inverse bump and run, indicated by these 2 trend lines. And when we were discussing this, we were saying, hey, we broke out past the first trend line. We need to come up to the second trend line and break out above there. And we're doing a good job of that. Ever since we got the weekly MACD crossover here, you can see that that's pretty much where the natural gas futures bottomed. And we've consistently put in higher lows throughout this time period, giving us more of a bullish stance and leaning a little bit more bullish, suggesting that we could come up and retest that $3.50 to $4 region. Now, why am I saying we could retest that region? Why have I been saying that? Well, it's very simple concepts, right? It's old support, right? We can see old support over here becomes new resistance, and we haven't tested that level as resistance, right? We look here, now we're approaching it, right? So it makes sense that this is going to be an area where price action is going to gravitate towards for liquidity, right? It was past liquidity over here, then we completely just blew past that zone and never really tested it as resistance, and now we're coming around round trip back to that area. And as I mentioned before, that 200-day weekly moving average is going to be right around 370, 380. So, you combine that with the fact that this is going to be overhead supply, and there's a potential for a strong, very strong resistance up in that area. And you do want to be mindful of that. Now, this is our monthly supply and demand zones, right? So we can see we have this major demand zone throughout the history of natural gas. And each time that we come down into these levels, whether we come deep into the zone or we just barely touch it, there's been strong demand and pushing price up higher. And then we've got these overhead supply zones that we've been battling for the entire year of 2023. We were battling and stuck inside of that overhead supply zone. And we talked about what you want to see is you want to see consolidation, right? You want to see an absorption of that supply imbalance, okay? Because that's what a supply and a demand zone is there's an imbalance of supply, imbalance of sell orders here that continues to push it lower. And that's what ends up happening, right? And so once you can consolidate in here, you're going to absorb those sell orders, right? And then the odds increase of you creating a demand imbalance, right? Because you absorbed all of those sell orders, and unless they're constantly being replaced, then you have the possibility for that now to turn into a demand zone. And we can see that that's what we got, right? We came up and tested this level almost every single month in 2023. And really, since the summer, we started consolidating around that area, absorbing that price action, absorbing those overhead supply. And we can see we've now pushed up above. But these areas in between are what I like to call no man's land. You don't want to be entering in no man's land because direction is not clear if we're going to test the new overhead supply zone or come back down and test demand, right? Your odds of success in a trade are much more skewed, right? You want to enter into areas of demand, enter into areas of supply. You want to enter in your key zones because then you can set up a risk to reward trade much better, right? And we talked about that here recently. And you can see on the 4-hour chart, we actually pulled back down into that zone, right? So we're looking for a 5-wave structure to take the MCX futures up to about 340. But overall, the overall supply zone is going to be right around 310, 315, up to about 340 is going to be the price target areas for this wave 5. You can see we got our 1 up, 2 down, and then wave 3 is typically your strongest and most impulsive move. We did get that, all right, and we came up to the 1.618 extension. And we talked about, hey, there's this huge gap down, right? That's what this arrow is highlighting, this huge gap down. It's very possible we could pull back, but oftentimes these gaps can act as areas of support and resistance. And we would look to see, on this pullback. Again, when I explained that no man's land concept, I was telling people, hey, this is not the greatest area to be entering long because you're not in the major areas of supply and demand, right? And you would look for a pullback and retest, and you can see we came back down and tested the previous 1.0 extension, also pulled back right around to the 61.8% extension. And I was saying that, not only do we have gaps tend to act as large areas of support, but it also is in confluence with a 61.8% retracement, which is usually a really good bounce zone. And you can see we came down right to those levels and bounced up higher. Now, the big question is, can we keep up momentum, right? If we can keep up momentum, then the MCX futures can head up to that 315 to 340 area. But we need to be cautious because of this gap down right here and this gap down right here. These gaps, they tend to fill about 90% of the time historically. The big question is when, right? Not so much if they're going to fill, but when they're going to fill. Now, for further bullishness, right, you're going to pay attention to your 4-hour RSI. And we have this downtrend line here. We're no longer in overbought territory, so we have room to run to the upside. And we want to see a breakout of this bearish trend here in the 4-hour chart RSI. And you also want to see this 4-hour MACD curl back above the red line. Right now, it's really just consolidating and chopping up, and that's what you want to pay attention for signs of bullishness. Okay, now when you take a look at BOIL, we talked about the range. Before we dive too deep into it, I want to say that there's 3 stages to a reversal. There's a downtrend, then you have box consolidation, which is what we've been stuck in since March, and then you have the actual reversal itself. So if BOIL can actually get above $80 essentially and flip $80 to support from resistance, right, then it's very possible we have this huge mega gap up on BOIL up to about 130 to 140. Now, that's not the most likely scenario at the moment, and that's not the scenario that we're going to plan for, okay? But just want to point out the 3 stages of reversal. So it is possible if we can break out and retest that $80 level and stay above there, that we can ultimately head up to these regions. But the natural gas futures would need to go on a tremendous run and a tremendous rally. So more importantly, we're going to pay attention to some of the shorter term levels. We have there's a gap down to fill at 61.65 on BOIL, so be cautious of that. Below there, we have 58.97 and 55.65 as support. Ultimately, if we break those, we're most likely going to come back and retest this demand zone right around $50 to about $48, $47. And then the overhead supply is right there at that $80 level and also about 78, 77. Okay, above there, above 80, our price targets are 85.65, 88.33, and 93.99 or 93.39. Those are going to be the major levels. But really, we've been stuck below $72.03. So ultimately, we're bearish below $72.03. All right. If BOIL can get above there and flip that to support from resistance as well, then that's when we have a greater chance of breaking that overhead supply zone around $80 and potentially hitting some of these bullish price targets we have to the upside. So, definitely chart that one up. Make sure you pay attention to 72.03. All right, we also have our 200-day moving average creeping lower to the bottom of the demand zone. This is going to continue heading lower and probably end up aligning pretty well with that 72 area, also supporting strong resistance here. So that'll be a very key area in my opinion. Now, UNG has been respecting the levels pretty well. We talk about these gaps filling. You can see that we had a gap fill right here. All right. And most recently, we just filled this gap up here. And we're starting to pull back, but we're consolidating between 715 and 731. Above 731, we do have a gap up to about 770 and then a price target here of 771. Above 770 or 777. Above 777, we have 821 and 852. Okay, so those are going to be all of your bullish levels for the short to intermediate term for UNG to the upside. But if we break below 715, there is a gap down to fill, so we need to be cautious of that. That gap is pretty much going to be right at $7. And below there, we have 667 as major support, 642 and 606. So those are all of the key levels that I'm looking at when it comes to UNG and BOIL, as well as the different natural gas instruments. Okay, we took a look at the Henry Hub natural gas futures on the weekly chart, and then we take a look at the MCX futures for that 4-hour and monthly zones. So that's way you guys have a bigger picture idea of what is possible for the longer term. All right. And then you also know some of the key levels to look out for on an intraday and week to week basis. So hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. Don't forget to sign up for that free newsletter giving out free trade ideas every single day. I think you guys will enjoy that. All right. And if you want to, you can sign up for the Investment Intelligence Discord directly. So that way you guys can get, access to all of the different trade ideas.